Hello everyone. How are we doing today? Let me open the chat and we can dive in.
Awesome.
I think a couple of more times and the music is going to be pretty annoying.
Yeah, I hear you.
We need to change the music from time to time because we're listening here for 2 minutes every time before the stream.
Well, I hope there is a possibility that we could switch up that music. That'd be amazing.
Definitely. I'll find more and I'll just switch it from time to time. Okay, let me share.
I think 2 minutes. I believe 2 minutes is a lot of time. Don't you think? Yeah, we're here like, oh my god.
Yeah, because it's 2 minutes, but I need to turn on the stream on a YouTube. Then I need to notify the communities. It takes time. So
yeah, man.
Let me share the screen so we can dive in.
Yeah, markets are a little bit this week. It's lethargic, very lethargic week at the moment.
Kind of thing, yeah.
What do you say?
It is.
I can tell.
100% agree with that. Because we had the CPI data yesterday.
Mm-hmm.
We bring it up right here. And okay, so although we did get lower inflation data, the market didn't react the way I thought it's going to react. Because from 2.7, what was the expectation? We want to, up here at the core inflation. From 2.7, we went to 2.6. From 0.3 on a monthly basis, we went to 0.2. So we went tick down on core inflation on annual and as well on monthly. So I'll say, okay, we might see some downside bullish momentum on, downside momentum on dollar, but not really though, not really.
Yeah, I think, it's that. Well, yeah, some of the readings went down. Obviously, yeah, core is a slight tick lower. The other figures are still, it's still sticky in a day. Remember that they want annualized inflation as close to 2% as possible, and it's still well above that. And, markets had this massive expectation or hope that they're going to be fast rate cuts, which is why, for this year, which is why, dollar slowed down a little bit. I think we're having a wake up call, especially with Powell holding it down. He's not looking to rush rates right now. It seems like he's going to, Trump's done is only going to make him just stand his ground a little bit further. I mean, the data's there anyway. So yeah. I think, I this is why, when you look at the dollar, I said the start of the week that we're in this range and we're going to run up to the upper part of that range. And then it's like, I don't know we need a catalyst to break us out of this consolidation. Look at euro. Remember, look at euro dollar. So serious range since June.
Oh, you mean on a midterm? Yeah.
From June.
Might be even long term.
Yeah. So we really need that catalyst to break us out of this range. Basically, we need something big. We
Yeah.
need something big. Otherwise,
Agree with
we
that.
could, yeah.
Well, by the way, what do you think about the pound and dollar? Because I'm having temptation to go short on it. To be honest.
Okay, we're aligned. Okay, I think
Are
I'm
you
looking
are
at
you are you
potential-
aligned?
I'm aligned with you. I'm looking at the idea of potential shorts.
All right.
At the moment, I think for me, obviously, I like to trade Asian range. Okay, I like to trade Asian range. I gave you the tool the other day, Jake. Did you sort of bring it up?
Yeah. I was checking. I didn't add it yet to my trading view, but I'm probably going to because I like the idea of Asian sweeps as well. I mean, it works well for you. You showed me some good quality examples, so I just wanted to test it for my own. So yeah, I'm going to add it definitely.
Yeah, man. So this morning, London AM, we've had a sweep of the Asian range high, but we haven't seen that follow through of momentum. What I usually like to see. All right, we did initially. We had the rejection. We had the reversal candlesticks on the 30-minute for GU, and then we've sort of slowed down. We've bounced of late, so we haven't had that follow through momentum. Usually, it's like sweep of the high. I'll be looking at a sweep of the high and then target in the low quite quickly, but now it's obviously heading to New York, so I'm keeping an eye on there might be another sweep potentially coming into play, and I'll keep an eye on possible shorts. But right now,
I hope not, because I'm already in the market, so I hope not. I've already sold.
Taking shorts.
Yeah, I've taken short in last 15 minutes.
Okay.
So yeah, I'm not that far. Well, the price is not that far from my position, and my idea is basically if I'll go back to an hour, I think, and if I'll do the footprint shot, I think we're going to sweep all of this down here, like these levels. So I think market's going to get for that liquidity around, what is it, 33.60, around that. So if I'll go back to candles, like I think market is going to take the another new low eventually, and we're going to take all of the liquidity days in this range. Basically, in a midterm, if no fundamentals are released, like the Friday's GDP too much in a favor of pound, that I would be targeting the 1.333. That's my midterm target. But yeah, I already took the positions because we said it last time. I wanted to hop into day trading, so hopefully I won't mess up my account. But we'll see. Already did 2 trades today, and nothing yet that would be something impressive. I was trying to sell the euro US dollar as well, and we were talking about it with Joel. I sold right at the top here. I will then pull up the MetaTrader bars, just close like 8-10 pips, so nothing extra. So I'm hoping that the pound and dollar will follow through and will go towards the downside, so I can close some profits today.
Nice.
Your idea is sweeping the highs and then going towards the downside.
I look. I personally like shorts where we're at now. I like the idea of it, but it's just the current price behavior on the 30-minute they're observing right now. Just still, it's a possible bull flag where we could sort of break out, go and sort of double top at those highs of today. Sort of double top up there, potentially, a bit of stop hunting, and then a continuation to the downside. I mean, that's what I'd like to see, obviously. And then if we get another rejection up there, then I'm going to take those shorts. I'll be aligned with you. I was watching them.
I mean, definitely can happen. I'm in the market already, but definitely can happen. The scenario that we will go up, take the fair value gap here, take the liquidity above these highs, and then we reverse towards the downside. That's why I have my stop loss order somewhere around this level, because then if we close above this, I'm pretty sure we're going to follow it through to 1.35, which is another very high liquidity zone. So if my stop loss is taken, I'll be trading either way, because if we close above that, I'll be taking probably the shorts towards 1.35. I hope that it's not going to happen, because I like to read the shorts a lot. So I'm in the market right now, and let's see.
Yeah, man. Yeah.
Okay, so that's pound. I'm glad that we aligned on it. By the way, guys, in the chat, you can let us know what you think about the pound and the dollar, if you are trading right now, or if you have analyzed today. Let me see the chat right here. Chaitanya, is there going to be any live trades today's session, as said last time? Yeah, that's basically it. That's basically it. No financial advice, guys, because you well know that me and Ken, we are swing traders. So no financial advice, just letting you know what I'm trading on ETH evaluation right now.
Yeah, I think just for me personally at the moment, guys, like these are not the most sexiest conditions, as I'm sure, like I just said at the start of the stream, we're a little bit markets are a little bit lethargic at present. So the intraday opportunities are, I mean, they're there, but I'm not seeing anything right at this moment in time. As I said, I'll keep an eye on that GU for potential entries on that GU. If those get those rejections, then I'll be looking to take some shorts. I like the idea of potentially a correction in gold. So we're sort of right at this moment in time. Shall I just quickly share my screen, Jake?
Yeah, sure. I can't see your screen right now, but if you'll share it, I'll put it out.
Yeah, I'll share my screen.
And then we can also take a look at the oil, because me and Angel, we were wrong actually, and you were right. Because if we take those longs, man, that would be a hell of a trade.
I know. And do you know what? I didn't take them, but because I'm not active in oil, but it's something that I'm going to look at, okay, because it's happening more often than not now in terms of recently. When for me, obviously, when I'm trading, when I am trading intraday, right, and I'm looking at these Asian range, I love it when we've got, obviously, like for example, now with oil, we've got a nice sort of trending market at present. Now, just quickly before I go into the technicals, the fundamentals are oil is being driven by, at the moment, on fears of supply constraints. So fears that, we've got US and Iran. Obviously, Iran's oil producing nation, commodity linked economy. If there is fighting there, there's a fear that oil supply could be disrupted. Even though that, like right now with oil, demand's just dead at present for oil. Demand isn't there and there's a lot of supply. But there's that natural instinct for oil traders that if supply gets disrupted, oil price push higher. So that's why oil's pushing right now. Now, going to the technicals, right? We've been saying it a little while on the past couple of streams, Jake, that the Asian range, the oil markets are responding really nicely to the Asian range. So if we look here on Friday, we had a sweep of the Asian range low. Obviously, we've now got structure forming. We had a sweep of the high as well. We had a sweep of the low, bullish engulfing, and now a push to the upside. Same thing happened, obviously, on this stream. Monday, sweep of the low, reversal candlestick. And it did, I think Angel might have noted about the possibility of like it double bottoming here. I'm sure he did as the possibility. And anyway, obviously I was talking about longs we were at this sort of candle here. I would have had my stops below here, this low, and I would have targeted the Asian range higher or a higher high, which was offering thereabouts 2R, which is quite nice. So that coming into play. And then again today, and what's annoying was I missed it because today I was freaking taking my two sons to soft play and I was monitoring this and I was thinking I wanted to get in, but I was busy. But the opportunity again was there. We had this reversal candlestick, the sweep of the low, bullish engulfing, and then a push to the upside for that higher high. So if you look,
that looks nice.
Really, what's that?
That looks actually really nice.
Yeah, it's
the setup.
Yeah, like it's super. Like it's very respectful at the moment of this Asian range. So that's why I'm going to take this weekend and do a little bit more back testing and potentially, this could make some nice trading opportunities on an intraday basis. But yeah, it looks pretty nice at the moment. It's very respectful.
Have you done some back testing already, or is that like part of your strategy for longer, or is that something that you have recently added into your strategy? I mean, the Asian sweeps and the engulfing then.
Yeah, so no, this has been in my strategy for a very, very long time.
Oh, okay.
With Euro and GU. So this is where I find I can get nice swing entries. So say, for example, obviously here, we're in a bear market this late December. Like ideally, I'm looking to catch this sweep, right? Sweep of the high, enter at that bearish engulfing candlestick, and then I'll have a couple of targets, right? If I'm early in the week, i.e. Monday, Tuesday, Wednesday, the very latest, I will have a couple of trades. So one will be for the Asian range low. Okay, so from high to low, expecting a bearish continuation. And then this will also present an opportunity as a swing short. So then I'll be targeting a swing, obviously marking up the higher time frame levels. And for example, if I was short here, looking for lows down here or maybe lower. But this presents opportunities for me in terms of swing entries, but also intraday. I've back tested this for going back years on Euro and GU, and it works very, very well. Okay. The data is incredible. It's phenomenal with euro dollar. I've done like, I've got a sample size of, it's over like 2,000 trades or something like that. I have it in an ocean. It's over like 2,000 trades. And the win rate's about 58% with a 2R of risk to reward of 2. So it's incredible. It's a very good system. It's something that I was taught when I was, when I was an analyst on the trading floor.
Yeah.
This is one of the first strategies that I was shown. And
was it?
Yeah. And they explained it to me because this is a way of like the desks, the institutions, they used to call it, it's almost like this semi-coordinated action with big players where they would, obviously all these guys are best buddies in a city. Like this is when London was extremely dominant in trading. Now it's lost its edge. But back then it was all about the big boys in London, the big institutions there. And they would have this like semi-coordination where they'd be like, okay, we know the market's bearish, right? Say, for example, euro dollar because of X, Y, and Z fundamentals. So we're obviously going to set these traps for retail guys thinking we're in a bull market. Obviously, we're going to take that as liquidity. We'll get better entries on our trades, take those guys out, flush them out, and then resume business to the downside. Because obviously with the liquidity sweep, and it makes sense, is like the move, especially, when we've got trends, it's not sustained. Okay, it's not sustained, and the reason being is because the institutions they can't just constantly be pushing volume through the market. There's only so much that they can push through, so it's like a short-lived move. Let's trap the retail guys, and then let's resume business to the downside. So that is what
makes
the
absolute
logic.
sense.
Yeah, that was the logic I was taught.
Yeah, it makes absolute sense what you're saying. Yeah. It's very interesting. Going to take a closer look into it because I've never been a big session guy, so I didn't really care if it was London or New York. When I had the setup, I usually went for the trade. I didn't care what was the session at the time, but it makes sense to at least like watch over it because sometimes it can be just liquidity sweep as you said yourself. So I'm going to, you send me the indicator, so I'm going to give it a test.
Just quickly, right? This, for example, just as the most recent one, this is an A+. So like when we've got this reversal doji here, right? These reversal candlesticks, and then we get a bearish engulfing, that's A+. Okay, that's an A+ entry. And obviously we have to be in a trending market. Like in this case, we're in a bearish market. You can obviously see that we can grab a quick bull case here as well. Here, for example, so we've got the test of the Asian range low. We just had a sweep. We're obviously in a bull market. We've just printed a freaking higher low. We had a bullish engulfing, and then we run it to the high. That's also an A+ setup. It has to be in a trending market. We have to have market structure. Otherwise, it drops down in ranking in terms of like likely probability. So
because sometimes it looks like it can take the high and the low at the same time. So I think you should have like some sort of a bias from higher time frames on the trend. At the best, like you do, the fundamental bias, so you know where the market most likely will go, and then trade according. Because you had a couple of examples where you basically broke the highs and the lows of Asian institutions, so then you just need to know the bias of a midterm.
Exactly. Yeah. So like this now today there's no real entry opportunity for me at the moment. There's nothing. I'm not liking the look of anything at present because I think we're just, to be fair, euro dollar is where we failed to print a lower low here. Just sort of sat on the sidelines. We failed to print a lower low. We had this lower high and then we failed to print a low. But we could find some rejections here because we have a pullback structure here. Lower high, lower low, lower high, lower low, potentially rejections here. So I'm keeping an eye at the moment. That's why I think with GU, that's why I have GU. I think we're going to come up here. Potential another sweep of liquidity. Same here, potential sweep of liquidity. Then I might look at some shorts. I'd rather GU at the moment. It looks cleaner. Potential double top. And then, I'm going to, if we get that bearish engulfing, that bearish rejection like here, then I'm going to take those shorts. So
I feel like a euro is a bit stronger than pound at this point. I don't know, but will depend on what's going to be the GDP print. But without the GDP print, if you compare the euro and pound, I think the euro is having an advantage against the dollar compared to the pound.
Yeah, exactly. So I'm going to personally keep an eye on that while we're on the stream. Maybe I will execute. Just let's see if we get that opportunity. Yeah, man.
Yeah, we now in that range, so hopefully we're going to get like big not swing, but what do you call it? Kind of lost the word. When the price leave the shadow, is it called shadow?
Yeah.
Yeah. So if we're going to leave a big shadow with possibly bearish momentum, that's going to be lovely. And yeah, we've got pretty much the same target. Mine is even a little bit lower than that.
Yeah, man. Well, yeah,
but you are using tight stop losses, don't you?
Well, yeah, on an intraday, I will use tight stop with this particular strategy, tight stop.
Mm-hmm.
Yeah, man.
Okay, makes sense.
And there are times when, for example, I'll enter on here and I might get taken out, and then I'll get a second entry opportunity. But the risk to reward obviously makes up for that as well. You know, if you're taken out the first time, I wouldn't go in on the third time because then I'd just know that's chop city. But twice, I'd say, and then that'll be it.
Okay. So Daniel is asking, what's the time frame? You are using 30 minutes, right?
30 minutes.
Yeah, 30 minutes.
Yeah.
Yeah, it's a bit different word because I used to analyze markets on daily, hourly, and now switching to 30 minutes, 15 minutes, and then execution on 5. It's like I was usually looking for execution on 30 minutes. Now it should be my highest time frame if I'm trading intraday.
Yeah,
we'll see.
Yeah, the same thing. Sorry, just quickly as well, just while we're sticking with sticking with this. Obviously, this is not necessarily like A+ right now because like this is euro sterling. I know I'll just mention it because Chaitanya likes euro sterling. Obviously, this is like range price action here, but it does present itself with euro sterling as well. And obviously, this could have made a nice trade anyway because with euro GP, you can see obviously we did have some structure really when you look at a 4 hour, excuse me, because we just had a period of ranging here, but we were printing lower highs, lower lows, and then we had this pullback. And we had this sort of double top within this range. We were capped to the upside. You can see that. So this would have made a nice opportunity when watching there on the 30-minute. Look, sweep of the high, bearish rejection, and then you place your stops above, and then you target in the low to being conservative, and then you could just look left if you're looking to run it and the next extreme target, and that could have just been the lower part of this range that we're in. But ultimately, we went and printed a lower low. Oh no!
Although looking at the euro pound, it doesn't look bad for longs on from our part. Like not something mid term, long term. I was just thinking about like short term. I don't know what's your view on it, but basically, if I'm selling the pound against the dollar and I view euro as like a bit stronger, even then it makes sense to have a bullish bias on this. And I'm not saying that I would target somewhere like way above like 87.3, but if I'll be targeting 86.8, which is not that far from actual price, let me take a look. How much is it? It's probably like 20-30 pips. Doesn't look bad at all.
I think from my perspective right now, like things are equal with the UK and Europe. There isn't anything massively bullish for either of them, where there isn't a big divergence. Okay, so I think with this is obviously the pound's had momentum. If you look the last couple of months, and particularly obviously this month, we've had some momentum to the downside and to the upside for the pound, and that's because obviously what I explained before, where the Bank of England right now very split. They were just about got that rate cut over the line last month, so markets were previously been pricing a lot of cuts in, but there's nothing driving euro at the moment. It's quiet. So this is this has been a pound move to the downside, and obviously right now, obviously structure is bearish. That you could argue that I see what you're saying in terms of potentially some longs, but we're consolidating again, subject to another drop. Like we had this here where people thought, okay, maybe we're bouncing, we're going to go long now, but we still respected structure and printed a lower low. So it's possible still here that we've got this consolidation subject to another drop until we break. Until we go and invalidate this structure, i.e. start breaking above here at 87.30, I still think we're in a bearish market because we could probably come back up here and then we could still print a lower high and then carry on.
Yeah, that's true. That's true.
So yeah, I'll just be skeptical of taking longs in this at the moment. I would.
All right, that's fair. That's fair. And I mean, it makes complete sense to wait for which is like the core. What you should do, wait for the break of the structure to have like a bullish bias in this regard in the euro pound. So I completely get your standpoint.
Yeah, man. So Yeah, let's see.
Okay.
Um,
Do we have any? Do you have any other charts that you are eyeing at this moment?
Oh, so just as an update in terms of the swing trade and Aussie CAD. So I ended up getting stopped out yesterday at BE. I'd moved my stops, and the reason being I adjusted my stops on this because the trade is closed. Right, remember his initial stops were down here at 92.30, and the reason being is that oil momentum. Okay, we saw that oil momentum. Obviously, for those that don't know, obviously there's a correlation with CAD. So I'm out of this for now. Okay, potentially we have this pullback into this zone. Okay, obviously Jake was talking about 92.00, potentially down here, but I still think that we're going to push higher. I think we just have this correction. We've printed a higher high anyway, right?
Yeah.
So as part of this structure here, we could come down, print a higher low, and then we get that continuation. So I'm watching this pullback, and this is, as I say, this is purely CAD is just being carried by oil. Fundamentals are not bullish in CAD. Okay, so just allowing this pullback to take place now, and then I'll look at some re-entries for Aussie CAD. Yeah, man.
I thought you were going to blame my course or a curse.
Yeah, well, I did say F Jake in my head when it ended up coming out. I was like,
that's true.
This crazy mother beep any more of my trade.
No, I'm stop commenting on your trades because I don't want to get blamed for it. So
yeah, just don't comment.
I'm not going to say if I like or don't like the idea. It's just an idea.
Oh, just shut up. Oh, no, but yeah, I think just to explain to people that was just the CAD is being carried, like where that oil momentum, that pickup is so strong right now in oil. Obviously, it's carrying CAD because Canada are a massive exporter of oil. A lot of their income comes in oil sales. So if oil prices are higher, they can charge more and they can get more income for that oil. So that's why CAD is bouncing on that. But it's going to be short-lived, in my opinion. It can only carry it so long.
Someone said Australian dollar, US dollar. Let me take a look.
Yeah, Jake, go on. You can do your thing. Share your.
Yeah, I'm just going to take a look, guys. If you have any euro, if you have any other forex currencies that you would like to take a look at, I'm going to analyze the Australian dollar, US dollar now, but I don't have an analysis, so I'll probably leave Angel to take over the microphone, and I'm going to take a look. So if you have any other currency pairs that you would like to us to take a look at, just send it into the chat. And Angel, it's yours.
Yes. All right, guys. So we've been pretty much rangy in the markets, like kind of on a consolidation profile because we had that initial movement higher, right? But as soon as we took the highs, we came back into the range. And this was an all-time high for ES. So I'll say that we might see then a retracement back lower. So for now, nothing on ES for me. I'm going to focus on NQ. So if you guys look at this, it's kind of like mixed because we do have a lot of liquidity resting above, buy sell liquidity for the price that can go and stick higher. But we do have this displacement lower from yesterday. Right, look at this momentum coming in the market. So we have this displacement. We break a structure to the downside. And so the price is likely to go and look for those lows right here with this structure that you guys are saying, right? But this highs, which is the liquidity resting, is something that is a real concern for me to take any trades. So what I'm going to do is work today with a condition, right? It's going to be this gap on the 4-hour. Well, this gap is still there and it's getting respected. I'm going to be bearish for the day, but as soon as this gap gets filled and we close above the gap, I'm going to look for longs towards the liquidity right here, right? That's the only thing that I can see for NQ because it's just weird. As you guys can see, we have this break of a structure. We have this momentum right here. The price is respecting this gap on the hourly time frame, which is this one. I would love to see then today, if we're going to respect the 4-hour gap, it's pretty much a resweep from the highs right here at the open. And then if we break a structure, I'm going to be targeting the lows, right? If not, then if we have like enough bullish momentum and we have a V-shaped recovery from here and we just fill that gap, then I'm going to be targeting that high and this high right here. So it's pretty much just like a waiting game to see what's going to happen. But pretty much the structure is bearish. So it's just hard to say where we're going at the moment. And when you have this mixed, this makes a structure where the price have liquidity above, but we're bearish. You either just stay away, you play defense, or just try to take the most obvious setups, right? If you look at the M15 after respecting this gap, we disrespected this one on the M15, and that's why we're trading lower. So with this momentum that we have right here, I would love to see this low and all the lows that we have here. All this trend line liquidity that we have here. So this looks like a great target for today. It's around 25,600. So as for the open, will be nice. Then if we have a retracement back higher, we tap into any gap that we formed, the M5 or the M15, and then we continue lower towards that low. It's the most obvious thing for me at the moment, and the thing that I'm going to be waiting for NQ, guys. So nothing else. It's just that 4-hour gap as a condition for the day is going to be pretty much what I have. Going to YM, we have the initial reaction out of the gap in the daily. We have another reaction back from this retracement on that day, on Wednesday and Monday. And as soon as we took the high and we create a new higher high, the price came back into the range. So that's pretty much a consolidation profile. So you either trade the edge of the consolidation, right? The edge is kind of like this. Let me show you guys. And you stay away from the middle. What? Okay, yeah. So I'm just going to wait until I have some sort of displacement out of this consolidation. Either this going to show me that we have bullish or lower prices on YM after this. On the oil, this was the condition that we had on Monday. This was 4-hour gap right here. If we respect the gap and we close above this candle, I was going to look for longs. I didn't, right? And if we disrespect the gap, I was going to look for shorts. I just missed that. It was a nice thing that Ken pointed out was about the Asian range. That's something that I'm going to keep in mind now to trade that. To trade oil, actually, because if you look at this, we have this high right here. Looks like a great target for the rest of the week on oil. And if we see at this structure here, pretty much higher lows and higher highs, we have this gap that is about to be formed by 10 a.m. once this 4-hour candle closes. So it will be great if the next candle opens, trades lower, leave a shadow, and then we just close higher from here, looking for that high on oil. All right. Yeah, so I would like to see that. And I'm going to be looking on the lower time frame to see if I can get involved on the longs. Keeping in mind that we swept Asian low, right? Back into this retracement, and this is a new leg in price. If you look at this hourly dealing range, we have this pretty much this new leg in price. We just put a Fibonacci here. Use this one. All right, I would love to see a 50% retracement out of this gap, which is going to pretty much match with the 4-hour gap that we have right here. And if that happens, then it's going to be great for the market to look for that high on 62. It's pretty much about 63. Yeah, $63 per barrel on oil. Will be nice to see that setup for today. All right. Other than that, I'm going to be watching NQ with this gap. All right. Looks like we're trading higher. Yeah. Just look at this, guys. We just swept London lows, and we're just trading here. So again, I'm going to be focusing on this gap on the 4-hour as a condition. We respect the gap, we trade lower. We inverse the gap, we trade higher, and we're going to look for the highs. So let's see what happens in 24 minutes after this candle closure to see what's pretty much the structure that we will have in the lower time frames to trade the indices. But other than that, I'm just gonna wait until I have something more like cleaner and clear for me to trade. But yeah, that's pretty much it, guys.
Okay, thank you so much. I'm just looking into the chat, and a few times we had the Australian dollar, US dollar. Let me pull on the screen probably. And
Yeah, Aussie dollar bias, please.
well, Australian dollar just got into correction recently on the index. I think it's going to be just a correction. Well, could last a little longer, but if I'll go to lower time frames, come on now. Yeah, we are now a little bit consolidating on lower time frame on Australian dollar. And if I'll take a look at the Australian dollar, US dollar, either here or I can do also futures, then basically, if I'll just purely take a look at the volume, there's not much really going on above. So either we will have sliced through, which I don't really think so, because if I'm looking at the lower time frame, like in 1 hour, I think we can go a little bit lower, taking these lows and possibly going to 664. So in my view, at least my bias right now would be short. If you're a big pattern guys, then is some sort of a head and shoulders pattern, but I don't really look at that too much. However, sometimes it shows that it can work, but technically and fundamentally, I wouldn't mind some short-term correction on Australian dollar, US dollar. Yeah, I mean, my best bet is that we're going to go lower on 664 on this level.
664.
Yeah, I think we're going to take all these lows.
Yeah, it looks vulnerable. I mean, it's the daily price action. You can clearly see this is like topping out behavior. We're sort of topping out the 4 hour. When you look at the 4 hours, arguably, if you look at patterns or not, there's arguably a head and shoulders. We've had the left shoulder, we've had the head, and we're forming the right shoulder right now, and we're at this key neckline. Either way, we're at key support 66, 80, 70, which is being penetrated. So it looks vulnerable, definitely to technical pullback correction, especially with that dollar heading, pushing back to the upper part of its own respective range. So yeah, I think that we are going to have that pullback. Maybe I think even 66s personally, all the way back down 66.
It's also possible. It's also very possible. I mean, for me, the first up probably should be the 66.4, but eventually, if we got enough bearish momentum, it can go as low as to 66. I mean, when you usually see these supports, retail sellers draw them as a huge support, really strong support. They are being actually really weak. So I think we are going to, nevertheless, if we're going to just take the lows and then continue towards the upside, I think we're going to take the lows. So that's a 4 hour chart. So if you guys were asking for Australian dollar, US dollar, if you are holding longs, I think your stop losses are about to be taken. Unfortunately. But if you're holding shorts, that's the side that I would take. You can let me know. It's Damsey Gaming, and I think someone else also was taking longs on Australian dollar. Oh, am I wrong? Probably just him. And Australian dollar, Swiss franc. Well, to be honest, I'm a big fan of Swiss franc, but I wanted to trade myself personally the US dollar with the Swiss franc. So buying Swiss franc, we just took the lows, the liquidity down here, and if we're going to get some sort of a reversal or close above these, I would gladly buy the Swiss franc against US dollar all the way to 1.285. Gladly. But first I would need to see market closing above this, which is quite far right now. It is about, that's a long way to go. So Australian dollar, Swiss franc, let me take a look at this. Haven't analyzed that for a while. I mean, that's pretty the same. To me, it's pretty the same to the US dollar, Swiss franc. we are kind of losing the momentum with the Australian dollar going sideways for the last couple of days. So I think we're going to break whatever flag is this, and we'll create a correction. In my view, would be nice to go all the way to the nearest liquidity zone, which is about 53. So somewhere around here. That would be probably my overview or my outlook for Australian dollar Swiss franc. But those are the pairs that I haven't analyzed for a while, so might be wrong though.
You see, today, I think markets are wary of. I did put out a tweet this morning. I was just saying that, with JPY, right? Obviously, we've been talking about JPY for a while. And I just said, like, we're at the stage now where this yen weakness becomes obviously a risk management issue, not a directional trade. Stay vigilant, because obviously we're in the territory of intervention. When you look at UK, we're now creeping into that territory.
Yeah.
Like, everyone's like skeptical. It's like, should I buy or should I? Like, if you're buying here, obviously, look, don't get me wrong, structure and everything makes sense. But if you're buying here, you are an effing gambler. Okay. If you're buying UJ, you are a mother beeping gambler. Okay, I have to tell you that.
That's very true. I was chatting to Colin, who's also sometimes on our streams in a Discord, and he was asking me the same question. We are getting dangerously close to the possible intervention from BOJ, and I said, yeah, it's really high risk now. I wouldn't take it. I wouldn't take it.
No, you wouldn't. You just wouldn't. So yen pairs are down today, and I think it's just that's in people's minds at the moment that we're at those levels. Let's sort of take some profits. But yeah, it's danger zone.
I'm just setting up on the trading view the exact where I took the So I took the trade right here. I'm not that far, and as I said, my stop loss is going to be above the fair value gap, and probably somewhere here 22 pips, and I'll be targeting level first 34. 34 sounds nice. So yeah, this is the trade that I'm actually trading today. Okay, I think we've got what we wanted to share, the markets that we have analyzed. We did get through the CPI. Let me take a look what's in the chat. Silver, little pushback, a pullback before continuing. Do we get a silver pullback? Let me take a look into silver. Let me do flower first.
We've had a nice rejection. No, I was watching that gold one. I don't even think I had a chance to talk about it, but basically we're just that price behavior. We're at the Asian range high at the moment, and we're just like tapping, and we topped out. It looked like it was going to sort of roll over, and we've rolled over now. We topped out. There's heavy supply there. Where the Asian range high is in gold, you can see.
In gold?
I'll just quickly share my screen quickly.
Yeah, sure. Please do.
You can see, right?
Yes, we can.
Yeah. I was looking. I had this zone. I've marked it up because obviously you can see the rejection.
Oh, can we? No, sorry. We are watching Andrew's screen. Sorry. So yeah.
Naughty boy. All right. Sorry.
Again.
Yeah. Is this? You can see now, right? Yeah. Is this zone here?
Yes, we can.
Bam. And I had this marked up, and I was watching this sort of behavior. And when we start doing this, like ticky, this is like the market's obviously exhausted, and it looks like really got what's so funny.
That comes from someone who's got 20 years of experience in the market. Let's go ticky.
Oh yeah, so this looked super vulnerable, and I was eyeing it up, but it's just one of those things, right? If this had been, we're in a bear market, different story, but it's like, you are going against the trend, but this would have been a high probability trade, to trade this in anticipation of the rejections there, and obviously just Asian range high down to the low. We're at least going to come down to the low there. But yeah, I mean, this is near-term correction, guys. We've been in a bull market. We need to pull back a little bit. I don't think this is like going to be a break of structure or anything. I think we'll just pull back maybe towards sort of 45.50 and some dip buying will come into play here. But it looks like we're going to take the Asian range low out. That's for sure. Big bearish rejection there. It looks vulnerable. But yeah, potentially.
Do you think we'll go even lower, or do you think that that's going to be it, and then gold might basically turn and go upside again?
To be fair, if we take out, so I would expect buying pressure to come into play here at 45 sort of 80 region at this sort of low, this higher low. If that gives way, then we're gonna pull right back, and potentially we could see this gap being filled. Okay, weekend gap, we could come down to here and find support and demand and push to the upside. So first is here. Sorry, look, first is the Asian range being taken out today. If this fails to hold 45.80, then I think we're going to come down to that gap, this weekend gap here at 45s, basically 4,500, 45.10 ish. So that's my take anyway.
Yeah, okay. I'm not gonna say that.
Yeah, Bubba. Yeah, I'll just keep an eye on this GU. It's sort of overrun the zone that I was looking at. Sorry, I'll just keep an eye to see if I was going to get some execution, but it's overrun the zone that I was looking for rejections. It's taken out the high. Okay, I thought we were gonna sort of double top there, but we could still come down. I'm watching it at the moment. If we get a nice, you see this, if it ends up being like a fake out, straight closure below, then I'm going to look at shorts. What's that?
Oh no. It was me. Sorry, my internet connection just started.
So sorry, I'm just going back to GU because I'm looking at potential execution, but if this closes back below now on this 30-minute, right? So it's like a fake out of this zone, just classic liquidity sweep. We come back below, I'll look at some shorts. But ideally,
you have the highs taken, because if you take a look at the futures, the high wasn't taken yet.
Go on, show your futures chart.
That's a big difference, actually. I'm sorry?
I was going to say, show your future. What high have you got on your futures chart?
Look, you've got the high already taken. I don't on futures. You see, this is 30. I can do 15-minute chart. This is 15-minute chart, and the high on the futures is not taken yet. It's this one.
Oh yeah. It's not shown on there. No.
Yeah, I'm going to take a look at yours. Oh, you're not sharing now.
Oh, sorry.
Okay, I'm going to credit. No, it's okay. So yeah, it still looks pretty good to me, because depends on what's your liquidity provider, but on futures, it still didn't break above. And even if I think still this gap is going to save the day. I mean, even if we're going to go here, we've got the gap. As of course, that I'm going to show you what I've learned recently, and this is what is called the order block, if I'm not mistaken. This candle. So we've got gap, order block. I mean, generally speaking, the idea doesn't look bad at all. Yeah. So yeah, I was just saying that you have highs broken, and I did not. So I thought it's going to be some sort of a mistake, but it's just a different liquidity provider.
Yeah.
Okay. Do we have anything else, or are we good to go, guys, for today?
That's all set, I think.
Yeah. Perfect. Let me take a look into chat, and we can call it a day. Gold is taking break before the move higher. That's very possible. If it's too full, need liquidity sweep above 460. Yeah. Okay, guys. Thank you so much, Angel and Ken, for insight. Thank you so much for being here, guys, in the chat. And I'll see you again, Ken and Angel, on Monday.
See you Monday, Mandem.
Yes, sir.
Bye, guys.
Bless up.
Bye, guys.